This is the Daily Market Comment at xm.com by Mario Sechikiriakos. I'm Cristina Marujos. A bombshell week lies ahead for global markets. Interest rate decisions in the United States, Eurozone, and Japan will almost certainly fuel volatility in every asset class, especially if the rhetoric of these central banks deviates from the prevailing market consensus. In the United States, the ball will get rolling tomorrow with the release of the latest CPI inflation data, which will be instrumental in shaping expectations around the Fed decision on Wednesday. Unless something dramatic changes after tomorrow's CPI data, the Fed will probably pause the tightening cycle this week, shifting the emphasis to the updated rate projections and any messages about the likelihood of resuming rate hikes in July. Hence, the reaction of the dollar will depend on several elements, including also how foreign central banks behave. Over in the Eurozone, the economy has fallen into a technical recession, but that's unlikely to stop the European Central Bank from raising rates on Thursday, where a rate increase of 25 basis points is fully priced in. Therefore, this meeting will be about how the ECB wishes to move forward. Market pricing suggests another rate hike is in the pipeline for July, yet the central bank might refuse to pre-commit to that, as incoming data suggests economic growth is rolling over and inflation is cooling. Under these circumstances, the European Central Bank is more likely to preach caution and patience, keeping its options open. If the ECB mimics the Fed and signals it might take a break next month, the euro could be left disappointed. The past few months have been a perfect storm for pound yen, which is trading at its highest level since 2016, turbocharged by a blend of central bank divergence and favorable risk sentiment. Rate differentials have widened lately as investors bet the Bank of England will be forced to keep tightening, but the Bank of Japan won't join the race anytime soon, and the euphoric tone in equity markets has been similarly advantageous for risk-correlated FX pairs. What the Bank of Japan does on Friday could decide whether the yen keeps sinking. If the Bank of Japan remains sidelined, that would leave the yen at the mercy of external forces, namely how foreign central banks act and how risk appetite evolves. Finally, the Turkish Lira has gone into free fall, hitting another record low this week. The appointment of Gay Erkan as central bank governor on Friday did nothing to calm the currency crisis, despite speculation she could triple interest rates to 25%. It seems even the prospect of dramatically higher rates is not enough to soothe investors, considering the risk that such a sharp tightening in credit conditions will ultimately produce a recession. Thank you for watching the Daily Market Comment at xm.com. Have a great week.